What's up? So today is Monday, December 22nd, 2025. In today's video, I'm going to be going over trusting your trades, trusting your setups, um, and not second guessing your setup. So this morning, we actually had two opportunities in which we could have gotten to NAS 100, the NASDAQ, in which we did not enter the trades. So I'm going to break down the setups. But then I'm gonna also break down why I didn't enter and why moving forward I will take these entries. Um, and so first, these were the two setups that we had here, um, in which you can see this one did a potential 2.2R. This one did a potential 3.28R, which really even went up higher, but just from this move here, gave us a pretty solid move. Um, but I'm going to break down both scenarios, both setups, in which we could have taken those. Um, and so to start it off, we literally always look for the same setups. We're always looking for some type of break of a level and then some type of retest of that level, right? So we see here on this 2 o'clock candle that the market broke above, right? That the market broke above, closing at 3. And so from here, we would have been looking for the market to play off of this zone. I'm going to change the color to white just for now. This zone here. And so what we're looking for on the lower time frames is the market to pull down into this level or even lower and then give us our indication to enter, right? So after waiting, we finally got everything to line up with our strategy in which we should have entered here after this candle close with our stop loss below the low. All right, like I said before, this trade set up on the 5-minute, but it gave us a 2.2R, right? So we went down from the 1 hour time frame to the 5-minute in which we got our confirmation that the market will potentially push up higher, right? Time goes on and price comes back down to the same level. And on the 1 hour time frame, we never broke a new high before then. So we can reuse this same level, right? So in the same thing, we go to NAS 100 and we look to see where everything aligned up. Once again, we see it align up on the 8-minute time frame right here. So after this candle closed, we were able to enter this trade. We could have gotten in for a buy, in which the market pushed up and gave a 3.4R move, right? Using that same exact level. Now, the only reason why we didn't enter this trade was simply because I wasn't sure if this gap was going to get filled, right? Most times when there's a gap in the market, it typically will get filled, but it doesn't always, right? So I was kind of hoping that the gap was going to get filled. And so I was waiting to see if that was going to happen, which it still hasn't to this point. But moving forward, I'm just going to pull the trigger, right? And the only reason why I'm saying that is simply because when it comes to my strategy, everything aligned, right? From the time of day, from the higher time frames to the lower time frames, everything aligned. And it's to the point where the gap isn't a factor to the strategy or anything that I consider to be a factor with the strategy. So I should have pulled the trigger not only once, but both times in a situation where we could have made some pretty good money, right? And so when it comes to your strategy, you just got to believe in it, right? If you have the rules and you following a checklist of everything that needs to happen for your strategy, there's no reason why you shouldn't enter your trades, right? There's no reason why you should second guess it. Now, if you're second guessing it, most times that means your strategy isn't that consistent. In this situation, the strategy is very consistent. So that's why I said moving forward, I'm not going to say not acknowledge the gap, but I'm not going to use that as a factor to not enter the trade if all my factors, everything that I need to happen happens with the strategy, right? It'll be different if something was missing from the strategy, but a gap isn't part of the strategy where or not a factor of the strategy, which I should be like, I'm not going to enter it because of this gap. All right, so moving forward, we will be taking these setups, but that's the main importance of trusting your strategy, right? If you don't trust your strategy or even trust your trades, let's say you're in a trade and you're closing it out too early, then you're going to miss out on potential profit, right? Just like, if you play sports, you're going to, if you don't take a jumper, if you don't take a shot, you're never going to score. You're never going to know if you're going to make it or not. So, you just got to pull the trigger, and that's where risk management comes into place, right? If you're risking the right amount, let's say you do take an L, let's say one of those trades did take an L, but the other one caught a W, right? I either be break even or I could be in profit just because of the risk to reward. And so, like I said, just definitely got to pull the trigger. Everything aligned, like I said, from the higher time frame to the lower time frame, all my indications, all my indicators, the time of day, everything aligned like it should, but we just didn't pull the trigger on this trade. So, I guess I'll take that mistake over losing money, but moving forward, we just got to pull the trigger and, make us some money. But other than that, that's pretty much it for this video. Hopefully tomorrow morning we can catch a trade. I'm pretty sure we will. And hopefully we can keep on making us some more money before this year ends. And so other than that, I'll see y'all in the next video.